Alright, we're continuing on here and we're going to do video number 3 with Bombardier Incorporated on the TSX. And looking at these technicals, I wouldn't look at this I wouldn't take this verbatim. I wouldn't invest based off of this, let's say. And what I'm using, or what trading website I'm using, is just TradingView. And I am using the free version, so you can come on here and all you need to do is set up a general account and need an email, and then you can do all the same stuff. And you can look up whatever you're looking at. So you could have looked at Bombardier, and then you would have got to this page here, and we got ideas from other people. You can go and look at what other people are saying, and there's always going to be opinions, right? But when you're looking at investing your money, I mean, it's a good thing to get better at, is just having a little bit more awareness, and yeah, it's never going to be a bad skill to have. So with this information, one thing I like looking at is the market cap, because you got to look at this and say, okay, if we want Bombardier to double, we need another $1 billion to flow into it. For it to reach 90 cents, we need another $1 billion, more than $1 billion, to flow into it. So that's something that we should be aware of. We got aerospace and defense. That's kind of industry, electrical technology. So I'm thinking like quads and stuff when I hear Bombardier, but obviously it's not this, that. We're looking at aircraft, aerostructures, all different type of mechanical machines, let's say. The commercial aircraft. Yikes. So when we're looking at the aircraft industry in general, it's probably one of the worst hit industries as a whole, I would say, from this pandemic, because travel has ceased, eh? So the one thing is, if you're using the free version, you're always going to get those damn pop-ups. So looking at Bombardier Incorporated here, we got data all the way from 1997, and right away, like, I don't want to start off on a negative tone with this one right here. I'm not sure when you got in, but I think that one thing to start with is just looking at the trend that it's going in. And for me, I don't necessarily like this, man, not at all, because we have no history here that's showing a positive trend. We can only assume a downward trend right now. So in that sense, I mean, I don't like that already. To see what this was worth at one point, we have it worth $26. It's now worth 45 cents. So where did you get in? I'm not aware of that, but likely you're losing money for sure. There's nowhere that you really could have bought and you would have been in a positive right now. So oh yeah, not to be dauntful here. I mean, hopefully this is the bottom here, but airline industries in general, just think, man, like, you can't even travel right now. World travel has ceased. So this is, just looking at this, how much is this involved in, let's say, planes and trains, right? But the plane aspect, man, that's just gonna get gutted, right? So Bombardier, what deals have they made with the government? Because that's the only thing that's gonna save them, right? If people aren't traveling, how are they gonna generate revenue? And trains, I mean, yeah, I don't know, maybe they'll hold up for it. I mean, the thing is here, I guess we have, let's just zoom this up. So we have an all-time low at 38.5 cents. So that's our new bottom, that's our new floor, that's our new line of support. Maybe it's a little bit lower than that, actually. Maybe it's 38 cents, but regardless, we're at 45 cents right now. In this monthly sense, we can clearly see we're in a downward trend right here. So we're downwardly trending, and that's not the trend line I would typically draw. I'd probably draw it from the top here and just kind of say that, hey, for us to bust through and see like some bullish activity, we'd have to break through this trend line, get support, and start moving upward. Then plausibly you might be able to see like some type of huge cup form here. But in that sense in itself, like, like, that just broke through the previous line in the sand there, and that could be spelling a deeper turn down here. And especially since it opened up at this state right there, it opened up at $4 in 1997. You don't want to see it 20 years later be worth just a fraction of what that's worth. So Oh man, you hate to see this kind of stuff. I don't want to see anyone invest in something that's heading down. Like that's probably the most simple and most important thing for investing. We want to get stocks that are trending up, and just like why play with fire? You're like, okay, yeah, this is gonna go to zero. I mean, not that I'm saying that, but you don't want to get in downward trending things. I mean, it's just a fucking nightmare. What are you gonna do now that it's down at this level? And you can see the state of the economy. Like, unless we have a full shift of like, okay, we're reinstating national travel globally, which is going to be tough when we just had a global shutdown. Not all the countries are going to agree on anything. You can look at this at a couple different ways, but I think let's make sure we have that trend line here at the top, like so, just kind of stating that, and then we can say let's start looking in more in a weekly sense, just to give us perspective of what we're looking at. And anytime you're going to draw a trend line, it's always relative to the time frame that you're looking at. So we could say that we have a shorter term trend line like so, just based off of the last 2 years, and then we have a huge month trend line. And you can always just keep on zooming this up, but you don't want to get tunnel vision and look at this stuff right here and be like, yeah, we're doing good. Not very good when you look at the full trajectory of the history. So you could do that same thing here, hey, and draw something like that, and you can just see increasing angles of down. But that creates a potential here for a breakout for like that kind of trade. So looking at this, it's pretty slight. So you can see 1-2 touches right here. We haven't broke the short-term downward trend line, and now I'm getting into like a shorter kind of trade that you could do. So for me, I don't like this stock for long-term investing at all. I'm just going to be saying that straight out. Besides me looking in and like plausibly, like spotting some type of short-term opportunity, I sure as hell don't like this. I don't like this downward trend. I sure don't like that break of 72 cents, because it's just like, man, we're just forming like a huge bottom here. And the long-term health of people in aerospace is just like very uncertain. I mean, globally, I could just see a huge decrease in travel, and companies like Air Canada, like the airplane companies, they got some rough fucking times ahead, man, because people as a herd are scared, right? So most people will travel less probably, and then besides the government regulating travel, it spells disaster for those companies. Like airplane companies, man, I'd get the fuck out of them. Like now Bombardier has airplanes and trains. Maybe it's got a little bit more hope. And the problem is, dude, like already at this point, like from the all-time highs, like we're down 98.5%. Like, how do you even sell anymore? Like, hopefully you haven't put too much money in this company. And this is the stuff that just almost breaks my heart to see this kind of stuff, because it's tough to be optimistic in this in any sense. I mean, the thing is, there could be room for a bounce back here, like just based off, if we use a fib, sometimes let's say if we go from the bottom here and go right here, we should expect a bounce, at least to the 382 probably, but it looks like it at least made it to the 0.23. So if we're going to use that as an idea, maybe right here from down to here, maybe we could see a bounce back up to, let's say, $1.50. In that sense, maybe historically speaking, maybe we can have some maybe we can have some stimulus get pumped into here, and it's not crazy to see it come back up and try to challenge this trend line, just like historically it usually will come back and try to challenge the trend line. And if we're going to look at this more in a short-term time frame, since it is a pretty large company, I mean, this isn't a small company, this isn't a penny stock, $1 billion market cap. I mean, you could assume that there's going to be some surge in buying here. So with this going down, we can establish this shorter time frame here, and we got this is just a general trade thing. So just since the opportunity here is, you know, since it's here, I might as well just highlight it. So we have a double bottom right here, and if we could break through this, if we get a confirmation, if this theoretically breaks out and breaks this short-term resistance and establishes a higher high and comes back down and gets a higher low right here, this could be a little bit of a bounce up here until we might be reaching, let's say, this area here, or maybe you just want to shoot for a humble target. But this could be a decent little short-term like day trade, swing trade. But like I said, that's not my forte. It's long-term investing. And when we look at long-term investing, we want to just always situate ourselves with positive trending stocks. And looking at the global macroeconomic climate right now, airplanes, dude, I don't see any future for them. Like, unless we have a complete revolution in thought. And it can take a lot of time to have that happen. But right here, I would expect if we can break through this little short-term trend line here, hopefully it doesn't just roll over and break through here. I mean, 38 cents, if it breaks through that, I mean, shit, you know, where's this going to go? I mean, I don't know, man, about this stuff, right? But it's also very dangerous playing these trades with downward stocks, especially when you're always, like, playing the positive gains and you're not... you're just like, it's just really dangerous because you should assume even if it gets up to here, it's probably going to roll back over, right? So typically when it forms this kind of price action, my prediction is that this will play within here. And then, yeah, maybe eventually we can form a bottom and have a resurgence in global travel. But does that seem like something that I want to throw my money at right now? For me, like, I'd probably want to wait till there's some more optimism in the world suggesting that that's the case. And I just think, like, looking at the global, you know, climate, they don't want people to travel. I mean, they don't want people traveling country to country, flying around. They want people to stay home. And oh, I don't know, I think you got my feeling about this one here, dude. It's really tough to sell at this level though, right? When you're 38 cents, if you bought in at 24 and you're pretty young still, I mean, it's just like, it's a really tough place to give any recommendation. I mean, for me, do I really want to buy into this? No, this is a lot of stress to manage this kind of position in this downward trend. And looking at the global climate, there's no rational reason that this is going to be a good play for me. So I think I'll just kind of say that's enough for Bombardier. Say a prayer for you all, and hopefully it can turn out for the better. But yeah, like, you got to be a pretty experienced trader when I'm talking about playing these bounces. Like so, you know, you can see this downward trend, but eventually it always bounces because that's how it works, right? We have the skeleton, and we have A, B, C. So if we're playing this this wave right here, it's a dangerous play, and I don't think you should get into those if you're not experienced. So I'm just not gonna bring that up anymore, and we're gonna look at the next one here that I have. So Rogers. I'm not actually sure which one this is. I don't think it's Sugar. It must be Rogers Communication. And it looks like there's two different ones. So I'm pretty... let's just take a look at them both, I guess. See what we're looking at here. So here we go, man. Like, this is the kind of stuff that you want to be investing in, right? If you're trading, you can trade anything, but when you look at stuff like this, it's just like, hey, at least we have a positive trend right now. Not to say that positive trending assets can't go down, but just to highlight one thing really quick here is that typically there's always a skeleton here, hey? And this is the Elliott wave theory that usually will give you an idea of what we're looking at. So within like these things, within these 5-wave structures, there's always a corrective phase within them. So this is that whole Russian doll analogy. So we always have an ABC within the corrective 1 to 2, from the 3 to 4, and typically after a full 5-wave structure, we will also have an ABC. Now, what proportion will that be is always to be determined, but when I'm bringing this stuff up, it's just to give you an idea what's the skeleton? What's the skeleton of these charts? And that's what it is. You can look it up. It's Elliott wave theory, and there's always wave structures, and that's why you always see ups and downs. But within each wave, I usually use the Russian doll analogy, and there's always waves within waves. So there's 5 waves within these bigger ones, and then there's 3 waves within the corrective phases. So it's getting messy, and a lot of times we don't want to overcomplicate trades. But when we're starting to look at stocks, that's what we're starting to discern. And sometimes I say, when we see these cup formations, when we see these cups like so, or right there was kind of a fake out, but when we see the larger cup right there, and the cup right here, and the cup right here, I mean, there's also little cups, right? We can say, oh, look, there's a cup here, and there's a cup here, and there's a cup here. And that's just where that Elliott wave theory can get broken down from anywhere from 60 years to a grand super cycle to something within like a couple hour time frame. So when you look at that, it's this Russian doll analogy, and there's little skeletons within each one. So looking at this, it's had quite the good run, and usually what comes up always comes down. But we can at least say this is reaching higher highs and higher lows. So that's always positive. And one thing that's a little bit kind of worrisome is when we don't get that higher high right here. So right there, we kind of had this corrective wave structure, and it didn't quite break through, which indicated that we had a little bit longer to go before we broke out of that all-time high. So right now, on a very positive note, I mean, from the last sense, we are kind of hovering around that all-time high, and it looks like I have it about 60.42, and it looks like we're right above that right now. So I imagine that this is a pretty high level of support right here, so I don't think that you'd really want to see it break through this range. To see it break below 55.92 might be indicative that we might be seeing some type of, corrective pattern right here. But when we look at communication, this is probably one of the industries that's not going to be hit as hard, especially comparing to something like an airline. So in that sense, this could have a lot of potential. We can see it's not quite as violently moving up and down. It's a little bit more, or you could say it's less volatile. We had to pull back down to that $49 range, but everything got hit pretty hard here. So in that sense, it's just, this one's not a bad one if you're thinking about a long-term hold. Like, we're right around this area here. You could say that, hey, I don't really want it to go below. Well, you could say this is a pretty good mark right there. Wherever it touched down, you don't really want to see it start, challenging. You don't want to see things roll over. That's what you hear a lot of people say, and it just rolls over, and you don't want to see that kind of shit happen, because it's kind of a sign that we're switching direction. And looking at this huge frame right here, I think we'd have to say this is wave 1, that's wave 2. Is this wave 3 right here, or are we forming like a bigger wave 3 for, let's say, if this is a bigger wave structure? And that's where, when you use these kind of tools, there's no like absolute, and they're a lot of times better in hindsight. But that could be something like this. Is that like the 1, 2, 3 right here? Is that 1, 2, 3 just a little bit shortened? Usually you want it proportionate, so that makes me a little bit hesitant right here if that is truly this corrective wave here. And are we just forming like an extended 5th wave like so? And just to like highlight something here, and I'm not saying that this is going to be what's happening, but right here is a nice little, well, this picture could pull up a little bit, but you can see here they're doing the 1, 2, 3, 4, and then it kind of goes flat and it doesn't reach that all-time high, and that's kind of a sign of a market failure. Now the good news here, looking at this, is that it didn't fall short. It actually busted up here, and it might have just got support right here, which was somewhat within this general frame of support right in here, and we might just be continuing onward. So this one has a little bit more potential for the upside, I would say, and we actually have a little bit of some type of stop loss here or support that gives us some confidence that there's not too much more room to lose. So our risk management here is good, because we're risking a little, and our reward is a lot more. So in that sense, I mean, for me, if I wanted to look at Rogers and make a play into here, I mean, the best play would have been right here, as it was challenging and it started to break up. You could have definitely played that. it would have been kind of unsuspecting for me to play down a little bit, but shit, these things never work perfectly. So you can look at some other things here, and a lot of times I like looking at the MACD. This can be a signal that we're having a change of opinion right here. So when the cross is right here, and this is just the MACD, the basic 1226 close 9, we got a cross over there, and it's indicative that we're gonna have a change in momentum. So looking at that and looking at this, when we get up so high, we have a lot of way to fall down, and that's where sometimes you just want to take your profit when you get them. And when after it falls all the way down, you could say that, hey, we're starting to have a switch of momentum. So this is a squeeze momentum divergence here, and you could say, hey, we're starting to click up to the upside here. So we started to establish that kind of a bottom for a while, and right here would have been possibly a good risk to reward entry for this position, because we had a pullback right there, so to speak, and it was probably proportionate to the upswing. So we could take this right here, go to the upside, and say, okay, yeah, when it did pull back and started forming these little bits of bottoms here, it pulled back into the 50 to 61.8% range. So that's quite normal, and that's just another way that you can say, okay, that's kind of working proportionately. Versus here, that obviously pulled back a lot more. Not quite as applicable, but it's just one of the ways that some people use, and all these different tools, they say, no, don't use them too much, but you got to figure out something, right? So when we're looking at the monthly here, this moving average is not applicable, but let's zoom in into the weekly and actually change this to a time frame that actually might be, you know, worth looking at. And sometimes I like looking at the 200-day weekly moving average. I mean, I don't see too many other people look at that, but it seems to be a pretty good place to, you know, you can see it's respecting this line here, and when it falls through that respect, sometimes we can expect some downturn here. So right here, it kept above it the whole time, and then just recently we kind of had that shift downward, right? In the month sense here, we had that little top right there, and we kind of rolled over. We could see a couple of these indications, but let's keep on looking at this a little bit closer. It looks like we're starting to round up here on the weekly sense, so this is interesting to see if we get supported here or not. And there's a lot more possibility. When you look at it in a day sense, we could have seen this kind of support get put down here. We kind of see we had two tests of this range, and then we started marching back up. Also, I just realized this has a dividend, so that's kind of a nice appealing factor as well. But on the day-to-day time frame, we could see that the MACD came here and kind of gave us a buy signal right there. Now it's a little bit tougher to buy when it goes down, so I'm not really recommending that you follow these things, but I'm just talking about how indicators that I use, like the MACD and the momentum, can give you a good insight into changes. And on the bigger time frames, I really like the momentum, and sometimes it's more applicable than not, so you got to use this kind of specifically to each chart, I mean, and see if it makes sense. So just like the moving averages, when you look at a moving average, the 200-day moving average is also a pretty good indication whether you're in a bull or bear market. And pulling back here, you can kind of see that, yeah, we're above it for the most sense. We have a pullback. It might be a good time to re-enter if you're really confident in this. But yeah, these moving averages, like this would be a better idea. So this was a clear bull market right here, and we touched down, and some people use that as a re-entry point. And when we're looking at longer investment strategy, I do like this 200 weekly day, because that's basically, you can think of it as the fair price of 200 days, 200 weeks. That's the average price of Rogers over the last 200 weeks. And right now it's about, $62. So it's pretty much right at that price level, right? So you can see where it's a general, it's pretty good, because a lot of times another way people look at stocks, man, if I could even type, it might be worth wasting your time here, but I can't see it anymore. But there's basically a range that I can't remember what. I'm not gonna waste your time here. There's always like, if we're looking at this, I mean, you could just put in the background undervalued, fair value, overvalued, and you basically always want to buy things that are undervalued, right? They're worth more than the price that they're selling it for, and you could just look at the buy low, sell high, right? So I guess Rogers, for me personally, let's say that it depends if you're already invested in this, then maybe you just want to hold on to this thing. I mean, maybe you want to look at some of this stuff, like if we see it breaking below $50, like that's going to be pretty, I'd be a little bit more anxious if I seen that, but overall, like this could probably still be okay. I mean, the good news is it is positive trending, right? I mean, that is the good news, but when you really look at it, I mean, it could have a touch back down here, but over the long run, you're probably fine holding on to this, right? It's not like this is the inverse and it's like, oh, we'll just hold on, it'll eventually go to zero. So with these ones here, even if you're wrong, sometimes you can just have time. You can be right over time. So that's the real benefit of getting in positive trending assets, because even if you make a mistake and let's say you buy in right here and it goes down, you know that this is pretty good, and you know we have a support right here, so you could have said, well, I'm not going to let it go below the previous support like so, and it didn't. You know, we caught that, and right here, if you use that same kind of analogy, you would have had it break through, but that's where nothing is completely 100% applicable to every setting. But over time you start seeing the patterns, and for this one, yeah, I would definitely be cautious about it dropping down here, but under the midst that we had that pandemic, there's some, you know, these are essential services, Rogers, so I'd be a little bit more confident in this one right here. I mean, the one thing I'd be a little bit cautious of is that it is kind of, well, it's not really extended right now, you know, like this, I'd be really scared about this, like that kind of angle, investing into this kind of spot, but right now it's kind of went sideways a little bit. So we got the roof right now, about $75, and we could draw a little bit of we could just even kind of say a shorter term trend line like so, and likely we'd probably see movement within here, right? And this is the good thing, is that this is a ascending triangle, it's not going down, so we're probably going to see price action bounce within here, and then it's either going to drop down or it's going to bust up, and this one probably has more chance to bust up. But you can do your own type of risk management, which is the number one important thing about being your own investor, right? So using that trend line, you're basically just increasing your profits that you're gonna lock in. That's how you can think of it. Like, you're gonna basically use it as a upward stop, a flexible stop loss that keeps on moving upward. Frick is the word I'm looking for. You know, I want to say conceal, but that's not the right one. To basically confirm your profit, right? To make sure that it's not going to just go up and go down and you're going to lose all your money. So hopefully this was the right actual chart, man. I'm just going to quickly look at this next one here too. See if I can just bang them all out for you. I got some type of CENOVUS energy. Maybe I'll just look it up on Google real quick. Sometimes it's, maybe I typed it in wrong. CENOVUS energy. So yeah, there we go. So I imagine it's probably, yeah, here we go. A little bit of research, you figure out anything. So again, just quickly look at the market cap, 4.5 billion, and just like when it's been employed, what it is, oil and gas, energy, minerals. So it's gas and oil provisions, Crude oil, natural gas in Canada. Oil sands, 1881. So it's a pretty old company. Yeah, there's going to be some different people saying whatever, right? This was back here, so some of these ideas aren't new, right? You got different people saying long, short. I mean, what do they know? You know, so don't take anyone's opinion too verbatim, because they probably know less than they actually do. Man, do I gotta say anything else? I mean, I just hate these negatively trending stocks, right? So oh yeah, man. Sorry to go quiet there, but dude, like I just, you know, like these are just, you know, these are hideous to look at for me. Like maybe like let's just roll that back a little bit. Like right here, let's say that we exclude this bar right there. This was looking not too bad. I mean, besides the obvious fact that we don't have any effing history here, right? So if this had some history and it showed that it had a good bull run, and we're just in this market correction, I'd be a lot more confident that we're actually gonna, you know, continue on with the market, right? But really, all I hear in Canada is carbon tax, carbon tax, carbon tax. We're shutting down the pipeline, and you got people on all ends. Sorry, I didn't have that. All ends trying to deny it, from the environmentalists to the Native Americans to the government. So. And then you have that whole push of like, hey, we want clean energy. We want carbon-free energy. Do I agree with that? Hell no. But I mean, that's just the stupid push there, right? So I guess we have, let's look at a positive. At least we have like a positive trending momentum coming up here. So that actually is kind of positive. But for me, it's just, you know, like it's just, these things can turn around. It's just, you know, it's just kind of like, for an investor like me, like this could look like a really good bounce right now, but so we had that bounce of 2, but I mean, we came up and it looks like we're starting to lose steam already. We're already starting to roll over, and I think this is going to continue back. It's going to keep going down. Like, it's coming up here, but okay, let's just look at this again here. Let's just take out some of this shit. We don't want it to get too messy. But again, when we look at this, you can see the 200-day weekly moving average, like we're not even hitting it, right? So we'd have to get above that for it to be bullish. I mean, looking at the daily sense even, right? We just had such a huge burn there. I mean, now do you want to try to play a bounce on this? Like, you could have played that bounce right here, that breakout one, but again, that's for day traders and swing traders, not for investors, man. I'd really like it to see it get above this 200-day weekly moving average. And again, this is like one of those companies that is kind of like airlines. I mean, could we potentially not see as much global travel? You better damn believe it, man. Could we see less gas products in the future? Every single stimulus package is saying yes. So do I agree with Tesla, and is electricity any cleaner than burning gas? I mean, it's debatable, that's for sure. I mean, but when those companies are getting subsidies from the government, it's pretty tough for them to compete, right? And especially when you get a whole vilification of the population for oil and gas, and I mean, you have the government does not give you any help as it funds your competitors. It's just like, dude, like, what are you doing, right? But this one, again, it's just so tough to be in these assets because they got to break through these lines of support, right? And it all depends when you got in here. I mean, this could have looked like an okay trade if it had this prior history, but as it broke here, you should have been gone at 890. You should have been out of here at 860 because guess what? There's nothing to hold it up after this. This was the last line in the sand, and now we're into new territory, and now we have a range of $2 to $8 right here where there's no price action. So in that sense, I mean, we could see a pretty big move in oil, or I mean, we could see it for sure eventually come and bounce back up to this range, but I mean, this is the trend that it's in right now, so we could just see this trash movement like that for, who knows how long. And when you look at stuff, I mean, I don't know, dude, I think that people can grasp the danger of being in these kind of assets. Like, I mean, you don't want to be in negatively trending stuff for investing. I mean, if you're a day trader and stuff and you want to play bounces off of this shit, then so be it, but that takes a lot of experience and skill. Like here, we could have said right here, just to say for the day traders right here, we could have said we had a sharp downcline, right? We had no bottom right there. Eventually, we had to form a bottom. So right here, we formed one. We try to come back up. We made a little bit of well, I don't know if I would really use that as the guideline right here. I'm sorry to kind of get off topic, man, but just kind of these patterns apply in a month time frame to 15 minutes, okay? So, but like when it has this downtrend and it clearly kind of gets a one touch, two touch, like I don't think that I'd use this 1, 2. You could have, but I'd probably use something like this, and then we get the break out of here. But man, you know what, man? Sorry to waste your time there. I wouldn't do that stuff with this kind of downward trending stuff, so let's not even bring that shit up. If you wanted to make some type of bounce trade, do it in a positively trending asset, right? If you want to try to do like bounce day trades, then why not do it in something that even if you mess up, you're going to be good if you just hold on for a time aspect, right? So if you want to play little downtrends and little breakouts, like anytime you kind of draw these lines down, you could theoretically do that once it establishes the bottom, but why not play in an asset that's overall positively uptrending in case you make a mistake and you can just hold on, right? This other stuff like that, I mean, you're just heading to hell, man, and it's just a matter of like how fast we're gonna get there. So I don't know, man. Like seemed like I was pretty negative with most of these charts, but that's just what they're doing here. So I'd like to know more about when you got into these things here too. So if you have more questions, you can always just relay that to your sister, and then I'll look at that in a little more depth. But yeah, for just some general recommendations where to put your hard-earned cash right now, go watch my videos on gold, man, because this looks like maybe that's a little bit disproportionate, but crap, there's a lot more potential in something like this when you look at the history of the world, and just I'd be a lot more confident in someone investing in things like gold and silver because, well, at least these things are, they're not companies. They can never go to zero, and they have the history of recovery, right? I mean, they do have these drawn-out market corrections, but only to regain and have another surge. So I imagine right now we're somewhere in here, right? We're somewhere in here, but over the next couple of years, man, I don't see that there's a lot of risk. The risk to reward in gold and silver are the best that you can probably find anywhere. Gold's a little bit extended after this little run. It'd be nice. We're probably gonna have a little pushback here, and hopefully we can just consolidate here, and then we can have a nice big move. That's a little bit premature, I would think. This push here, if I can just take my emotion out of it, I mean, we all get scared and panic buy gold because the whole world's printing money, and the only thing guaranteed from printing money or quantitative easing is that inflation will come. So that means gold will increase in value with dollars, but it doesn't mean that it's actually becoming more valuable to buy another asset. But it's the best thing to protect your wealth from inflation. And with the current climate and the world printing trillions and trillions of dollars, man, like, you better believe it's coming. So I would say, instead of investing in negatively trending stocks, man, like, you got to get into something that's going to hold your wealth. And if you're working hard for your money, you don't want to just throw it away. And risk management is number one. And there's a lot to learn with trading, and I'm a very inexperienced trader after 3 years, and I do a lot of this just to get the experience, to see the patterns, to understand the skeleton, and to understand the motion of trading, right? So right now, I think that we're a little bit overextended here, but you never know. We might be able to push through here. This could be a little bit more drawn out. You know, I mean, it all depends how big this could be, but right here we had that same kind of phase, and we're repeating it again. And there's a lot more optimism in my mind for these kind of assets like that. And or even looking at something like Tesla, right? So here you got your competitor to CVE, right? And I don't know what's wrong with this Tesla. It just goes straight up. I mean, but in the same sense, like, do you want to get in right here? This is a weird one, you know. I mean, but you want to get in. You want to get in assets that are positively trending, and that's what I'll leave you with, man. Everyone, take care. Have a good day, okay?